Good morning, everyone. Welcome to the Macro Snapshot. We are Tuesday, September the 16th, 2025, recording this in the morning as always. Okay, let's have a quick look at what's going on, what we have today. The market's in quite a good mood. The sentiment over the last few days has been relatively positive. It seems as though global markets are taking a glass half full sort of viewpoint of the world. We have an upcoming sort of phone call apparently on Friday between President Trump and President Xi Jinping of China. Apparently, they may be in the process of thrashing out a final sort of deal for TikTok. And in consequence to that, Chinese assets have been rising. So there's generally sort of a sense that, we've got over the sort of the tariff bump. Trade accords are sort of more or less, working their way through the system. The Fed will be cutting interest rates, no doubt, tomorrow. Companies are doing relatively well. So there's a general sort of a positive sense in the marketplace. Now, could Jerome Powell with a hawkish sort of cut tomorrow upset that? We'll talk about that a bit more tomorrow in the Fed preview. But that's the situation at the moment. We also have sort of lower sort of interest rates at the moment. We have lower sort of yields on bonds, and that's giving a bit of a push to the equity market as well. But what I just want to have a quick look at is some of the data. Yesterday, we had a slightly weak Empire manufacturing, which did, you could argue that depressed the dollar a little bit more, but nothing sort of too dramatic. But really today we have some hard data. So we have the retail sales, and as always, the most important thing is probably the two subcategories here, excluding automobiles and gasoline, and the control group, which also excludes a lot of home improvement stuff. So it's really like the super core, if you want, is the control group. And as you can see, the control group is sort of the consensus is for that to have fallen a little bit to 0.4. On the other hand, auto and gas, we've got up a little bit compared to last month. And some of the other numbers are up, auto month over month, but the advanced number overall down. So a bit of a mixed bag in terms of expectations. This is a fairly noisy number. But overall, if this can be achieved, what the consensus is, it's showing a consumer which is still, relatively robust. There has been a lot of talk if you look at analyst notes and whatnot, about the K-shaped economy, the fact that people with assets, they've seen appreciation in their assets, in their stock portfolios, and in some cases of housing, crypto wallets, this kind of thing, real assets going up. So that top part of the K, that part of the society is doing well, and the bottom part of the K, which is the income people at the bottom 10, 20, 30% are not doing so well and are really being hit by a cost of living crisis with inflation. So the real question here is, when we look at retail sales, is the retail sales a function of the top part of the income earners still spending money, or will that spread to the lower part of the K, so to speak, not spending money? So that's going to be an interesting one to look out for. Other sort of important thing today is the import price. So we have the import price index, maybe excluding petroleum is probably the best one to be looking at. And that's going to be important just to see whether we are getting sort of increased prices from, people importing. I do beg your pardon. Sorry about that. I do excuse myself. So just as I say, import price is going to be important to understand whether importers are actually raising prices and reflecting tariffs, or whether they're essentially not doing that and are going to let the consumer pay for that in the US, or maybe sort of wholesalers and retailers within the US. So let's keep an eye on the import prices. The other thing which could get the market's attention early on is, just let me bring this up, for Canada. We have a Canadian CPI, which is this morning. The Bank of Canada does like to look at the trim and the median here. So as you can see here, the trim is expected to stay in line, but it's still 3%, which is towards the upper ends of the Bank of Canada's desired band. And you can see the median is actually 3.1% expected for the survey here, which prior was also 3.1. So this is the problem for the Bank of Canada, that although it looks as though a lot of the real economy metrics are worsening in terms of the employment situation, in terms of GDP per capita. If you look at capital expenditure, a lot of these things, it does seem as though the Canadian economy is contracting in some, relatively significant way. And that would argue for a cut tomorrow from the Bank of Canada. But the problem is, the part of their mandate, that the CPI is still looking, in the high twos or actually in the threes. So this is a problem here. And as we can see, if we just quickly flick across and see what's expected, I think I mentioned this yesterday, yesterday, but just to remind ourselves that the meeting tomorrow morning before the Fed, the market is pricing in an 85% chance of a cut, so 21 basis points out of 25. So that's considered more or less a done deal at this point. But I have to say, if the inflation does come in at 3.1, 3.2% this morning on the core number, that's definitely going to get the Bank of Canada's attention. So the point is that it may be quite interesting to look at their statement tomorrow. It could be like a hawkish cut, maybe similar to what the Fed will deliver, but we shall see. So let's keep an eye on Canada as well. Other thing to think about just in terms of what's going on in terms of the Fed, and we have, obviously the Fed coming up tomorrow. You can see here that, one cut is still priced in, 26 basis points. Obviously, it's going to be about the statement, forward guidance, the summary of economic projections, and all of that sort of ancillary stuff, and what Powell says in his press conference, of course. But just in terms of the politics of it, we had relatively late last night a court in the US essentially confirmed the fact that Lisa Cook, whom Trump is trying to fire, could in fact participate in today and tomorrow's Fed meeting, and that she would be eligible to vote. Obviously, the White House will continue to put pressure on the court system, the legal system, to try and have Lisa Cook fired. But it does seem that's going to be a slightly harder battle. Now, will that change the outcome of the Fed meeting? No. But symbolically, it's something really to look at, to keep an eye on, and politically as well. Secondly, yesterday, a very short sort of period of time, Stephen Miran, who was on the Council of Economic Advisors for the White House, he was basically sworn in by the Senate, confirmed by the Senate. Excuse me, I have to grab some tea. Apologies for that. Some stuff in the sneezing and have a dry throat. But basically, Stephen Miran, he was confirmed by the Senate Banking Committee yesterday, so he will be voting. So we have this interesting situation. It'd be quite interesting to be sort of a fly on the wall, so to speak, because we have Stephen Miran, who's very much sort of the Trojan horse of the White House inside the committee there, and you have Lisa Cook, who Trump was trying to be fired by the White House. So both of those people will take their place on the committee, and be, as I say, be interesting to look at the minutes, and which we'll get in a few minutes to see if in a few weeks to see what conversations were had. So that's for tomorrow. One thing, so let's look at a few different, actually just talking of Stephen Miran, it's quite interesting. He wrote that very famous paper, which everyone read, about the global order and the reordering of global trade and whatnot, the so-called Mar-a-Lago Accord paper, which I think came out last November, definitely worth reading. And he's considered one of the key intellectual cornerstones of Trump's policies. He's a big believer in tariffs, and eventually a sort of a weaker US dollar. So he's interesting. And now, as we see, as well as being on the Council of Economic Advisors, he is now, of course, in the Fed, at least in the short term. And it's interesting that as part of his confirmation hearings, he did mention a long lost sort of a phrase, which was part of the Fed mandate, the original Fed statute, saying that there was sort of like a third mandate. He actually mentioned this, like a few days ago, saying, oh, actually, there's a third mandate of the Fed. And I quote, which is moderate long-term interest rates. The Fed must pursue moderate long-term interest rates. So what Stephen Miran is slowly starting to argue is that not only is there full employment mandate and a stable price mandate, but in fact a kind of de facto third mandate, which is the pursuit of moderate long-term interest rates, so lower long-term interest rates. And the fact that he quoted that from the Fed statute, the original statute from many years ago, it to me seems to be saying that maybe the White House and Stephen Miran is preparing that as a kind of a legal justification for introducing some kind of third mandate. And the point is, from a trading perspective and a market perspective, this does seem to be that the Fed definitely wants to stimulate the housing market. We know that DeSantis has talked a lot about that, Trump himself, and that they do want those long and medium-term rates down. And I'm not saying they're going to do yield curve control in an active sense, but there could be sort of, some kind of twist operation that they really start pumping out the front end bills, in a much greater proportion to try and bring down the long-term rates, or maybe doing buybacks of long-term bonds. Anyway, just to say that the White House was an interesting comment, and the White House is definitely very, very focused on almost sort of formalizing a bit of control over the long end, apart from the front end. Okay, so let's just look at a couple of markets here. One market which I just want to have a quick look at is oil. Just because there was a bit of news, oil, pretty much stuck in that sort of soft range here, but you can see. Not doing a huge amount. There was a talk that Russian sanctions on Russia by the EU are being postponed or delayed, and so oil sold off a little bit, but it looks as though it's come back in the last couple of hours or so. So oil just bouncing around. It looks as though that level here is pretty important, 61, 65 on the front contract here. But at this point, really waiting for either a sort of a geopolitical boost or some sort of evidence that the global economy it will sort of reaccelerate, maybe some stimulus out of China or a particularly dovish Fed. We shall see. Oil just bouncing around there. What we did see yesterday was a little bit of a pickup in the VIX, so in volatility. So this is a little bit of event volatility being priced in. Obviously, we have a bit of data. We have the Fed, of course, and we have quite a lot of central banks. So no surprise. So the VIX up a little bit here. And really, this is just the contract roll here. So, ES not really, up a little bit here. If we look at NASDAQ, also the contract roll rolling up. But if we look at something like the Russell, not doing a huge amount here. So it's sort of underperforming at this point. So still at this point, we do seem to have the tech sector ripping a bit higher. You see the equal weight here, a little bit of red compared to the Magnificent Seven, the big tech stocks, which are sort of bouncing high. And you can see in the pre-market even higher. We've seen, big run-ups, obviously, in things like Google and Oracle. Is that a bubble? Will it burst? We shall see. We shall see. But at this point, definitely a lot of those stocks do seem to be overbought from a technical perspective. But what we do know is that momentum can continue for a long time. So it's a difficult one to call that. And a lot will, of course, depend on the rhetoric which comes out of the Fed tomorrow. But basically, the equities are pretty much just grinding higher, with the tech stocks sort of being the dominant ones and leading the lower caps. One thing I will say about the Russell, just doing some research yesterday, is that I was reading in a research note that apparently about half of the Russell companies, they have floating rates. So the debt is not fixed and medium or long term. It's short term and it's floating. And a lot of that floating rate is determined by the SOFR rate, so the secured overnight financing rate, which of course is really what the Fed targets in a certain, well, the Fed targets the Fed funds rate, but essentially they're very closely tied. The point being that sort of the debt situation and the debt ratio, which a lot of the Russell companies or companies in the Russell index have to pay, they're very much tied to the front end rates, the SOFR rates, much more so than some of these tech behemoths and sort of multinational companies. And so the thing is that really what happens tomorrow, that should in theory benefit the Russell if there's a cut, or actually if there's a dovish cut, because the cut is already priced in. So that's something to look out for tomorrow, is really the relative performance of the Russell, because as I say, they are from a technical perspective very, very sensitive to the front end rates like the SOFR rates and the Fed funds rate, because that's, as I say, the benchmark from which a lot of their debt is priced. So that's something to be looking out for. What we have seen yesterday in terms of the dollar, we saw the dollar weakening, and you see that the dollar index here just continues to grind down, and that's just probably a little positioning, just going into a Fed, which is going to be starting a sort of a cutting cycle, and also this, the slightly bigger picture issues of, maybe a Fed, a White House, a Treasury, which wants to sort of contain longer term yields and generally wants interest rates lower, et cetera, et cetera. So there's a lot of, we've talked about that quite a lot of the structural issues of the dollar, but the dollar is under pressure. And you can see, looking at a lot of the currencies here, that you look at the euro, we had a ZEW sentiment coming out this morning from Germany, which was mixed, but overall, not too bad. Let's call it solid. And we also have the consensus that the ECB is done cutting. So it looks as though the euro definitely wants to test to the top of this range, almost there, almost touched at about 118.25. I think, to be honest, if we get a dovish cut tomorrow, there's no reason at all why this can't push quite a lot higher, probably up into the 119s, 120s over a bit of time. We also see the Swiss franc doing particularly well, US dollar weakening against that, bit of safe haven, but also on the fact that the Swiss National Bank last week, the governor Schlegel was out and saying that, whilst negative interest rates was a possibility, there was a high hurdle to clear for him to do that. And so the market market has sort of understood that, just at least for the time being, the Swiss National Bank prefers not to go negative. And that's probably at the margin helping the Swiss franc a little bit, apart from sort of geopolitical safe haven flows as well. We have the pound also doing pretty well. We had the Bank of England on Thursday. We'll talk about that a little bit later. But basically, this morning we got employment data out of the UK. That was relatively solid. Nothing there to force the BOE or to encourage the BOE to cut interest rates. Keep in mind that the BOE is expected to hold on Thursday, and so the pound enjoying general US dollar weakness, and it looks again. Pretty key level here, but it looks as though that is in a bit of an uptrend, certainly above all the moving averages here, and that could push up to the top end of its range. One thing which is quite interesting, oh, just looking at CAD here, as I said, we do have the Canadian CPI coming up in about an hour or so, so let's keep an eye on that. But even that one, the Canadian dollar hasn't been that strong against the US. It's kind of underperformed a lot of the other crosses, but you can see here that even the Canadian dollar is starting to pick up a little bit of energy, a little bit of strength versus the US dollar. There is a key level down here at 137.35. You can see that's a lot of sort of resistance or support, I should say, down there for the US dollar. It wouldn't surprise me if today it meanders down towards that level, and then of course could get a kick from the Canadian CPI, and then obviously the Fed tomorrow. So let's keep an eye on that. One thing which is interesting is the Japanese yen. As you can see here, just stuck in a huge trade range. It's basically been in that range for about 6 weeks or so, not doing a lot, possibly waiting for the outcome of the Japanese leadership contest. Some people this morning, I was reading some research notes this morning before doing this, essentially saying that there's a new candidate for the leadership who's a bit more sort of mainstream, less of a populist, and therefore a little bit more yen positive, but not really a huge pop on that. Again, I think just waiting for a direction probably from the Fed, the US dollar, and obviously the BOJ. And the BOJ itself is waiting for clarity on the leadership of the LDP over in Japan, Liberal Democratic Party over there. So maybe for the moment, that's just something just to keep an eye on. On the other hand, if you want to take a bet, it's quite an interesting level in terms of a short here for the short US dollar, because it is doing a pretty substantial sideways consolidation here, and you have a clear sort of exit point probably up here at about 149 also. So that's an interesting one if one believes that the BOJ will gradually normalize, the political situation will stabilize, and that the Fed, in fact, will begin a relatively substantial cutting cycle. That's an interesting one in terms of JPY strength gradually coming in, maybe down towards the 144, 143 level. Just finally, guys, let's look at gold, which just continues to rip. I'm going to look at the cash market here. So this is the spot price. Not a lot to say here, except that it broke out of the sideways sort of consolidation and is ripping higher. I mean, what more can we say? If we look on the futures, similar kind of situation here. Even silver has ripped out of its sideways range. Silver could have a little bit of resistance up here at around about $44 or so. But basically the precious metals getting a lot of flows. I was reading some articles yesterday. A lot of people are saying that the Chinese central bank buying, which is sort of OTC, a bit sort of over the counter, or maybe even under the counter, certainly not fully reported, is maybe 8, 9, 10x what is officially reported. Point being that China is buying a lot of gold, both at the institutional PBOC level, but also retail is buying a lot of gold, a lot of inflows going into ETFs in the Western space, let's call it the US space, like GLD. So really the retail investor is sort of pouring in, which is a relatively new thing as well. So the point is that gold, and to a lesser extent silver, well, lesser extent silver is fully pumping up, really reflecting the possibility of less fiscal discipline globally, geopolitical risk, de-dollarization, debasement of fiat currencies, sticky inflation in the US. What more can you say? So these are good times for gold. The other thing as well is that as the nominal yields potentially are coming down, that's going to reduce the real yield as well, which is a negative for the US dollar and potentially a positive for gold. So basically gold and silver, the shiny metals doing very, very well here. At this point, it's just a question of maybe trying to look for some kind of retracement. But it's difficult because it seems to be a relentless bid. What's also interesting, if we look at London price for copper, you can see that copper too is sort of breaking out towards the top of its range. If we go back to the high grade contract in the US, remember after that the news about sort of no sanctions, there was a crazy drop of, I think it was like 23% here. But even in the New York COMEX traded copper, that's also pushing a bit higher after it ground sideways for a few weeks, now starting to grind up as well. And maybe getting a bit of a sentiment boost, if relations seem relatively, sort of positive or at least neutral between Trump and President Xi, that's probably not a bad thing for the copper market as well, in terms of, potential demand out of China and a loosening of the Chinese market. Okay, so I think I'll leave it there. I've spoken enough. So let's keep an eye out for retail sales this morning, Canadian CPI, and also, as I say, the import prices, just to see whether those tariffs are having a strong effect on the prices of goods coming into the US, or whether the US consumer and retail is going to be forced to eat that. Thanks, guys. Have a great day, and we'll be back tomorrow with the macro snapshot. Thank you.